Henry Truc with Equities.com. I'm here today with Jeffery Kraws of Crystal Research Associates. It's quite a treat for us. Jeffery, for our audience who aren't familiar with you, can you give them a bit about your background?
Sure. I came out of Bristol-Myers Squibb, where I headed up competitive analysis for the board and CFO. Came to Wall Street and have been a top-ranked analyst on Wall Street for 26 years. I've either headed up the healthcare teams or been the senior healthcare analyst at Deutsche Bank, Alex Brown, Montgomery Securities, CS First Boston, Nations Bank, Montgomery Securities, I guess now, Gruntel, Ryan Beck, ABB, and others. And it's been a great ride since I guess it was the late 80s approximately, and been fortunate enough to been one of the first people to ever write specialty pharma and to have consistently been ranked top 10 in the world, many times #1 in the world for stock picking by either Starmine, Zacks, Institutional Investor, or the like.
So in general, basically he's saying if you're looking for advice on investing in healthcare, probably be hard-pressed to find someone better to talk to. So
it's great to have great contacts, and certainly I've learned a lot over those 2.5+ decades, and currently we're advisors actually to 9 funds with about $19.2 billion under management, not to mention being a regular guest on CNBC, Fox, Bloomberg, and the like.
Now, when we're looking at healthcare and investing it, there's obviously a lot of sub-segments that have wildly different characteristics, but as a whole right now, when looking at healthcare, what are some thoughts that come to mind for investors?
Well, the thoughts for investors are to keep in mind large cap pharma is under continual pressure. They have a giant asset, and that's cash, and they have a tremendous liability, and that's time. And we've seen the large cap pharma companies move more and more downstream, taking things on that are earlier, whereas in the past they would wait for products to be more developed. We've also seen large cap pharma pursuing products which are smaller in nature just to help fuel their engines. So I think what you're seeing now is consolidation of the haves and the have-nots, and I think you're going to continue to see that trend continue and accelerate throughout this year.
Is that a result of that pipeline cliff that a lot of the companies were facing?
It's a result of the pipeline cliff, and it's a result of many years of unproductive product pipelines through many of the larger companies flowing down to some of the smaller companies, and now you've got biotech companies that have become major forces which also are competing for products and going after companies early and earlier, and you're seeing pharmaceutical companies go across the board, which is you're seeing a J&J pursue a biotech company, you're seeing a J&J pursue a medical device company, you're seeing large cap pharma, which was once the largest producer of generic drugs, also sort of getting back into that business.
Now, for these types of companies, for an investor looking at them, and it sounds like they're willing to take on more risk for the potential to add to their portfolios. As an investor, is this a good thing or a bad thing?
I think on a case-by-case basis, it's to be determined. When investing, I always try to look at a few key components. The #1 thing is a strong management team, because you can have a strong management team that can right a really bad situation and turn it into something good. You could have a weak management team that can take a great situation and actually kill it. So we try and look for a few key components when we're looking at companies initially to start out. That is strong management team first. We like diversity and depth in your pipeline, and we like a company that's really trying to take a variant and do things in a different manner than other people have pursued before. That is, keeping in mind, we haven't really cured a major disease in the last 75 years, but we've certainly come up with some really novel treatments. So we like companies that pursue things on a novel basis, that is, taking into account drug delivery, physics, applying it to chemistry or applying that to biology to try and make the products of tomorrow a commercial reality.
So when looking at biotechs, what are some developments or trends that you're seeing that's becoming very exciting?
Well, trends in biotech, I think you're seeing a lot of the advanced technology that's out there today. Computers sort of catching up. It's sort of like the days of the past when your computer couldn't keep up with the technology, the software. Now you're sort of seeing all these great, high throughput screening companies and 3D imaging companies and recombinatorial chemistry companies and a whole bunch of just new technologies. Those are even older. New technologies that are helping people screen products, develop more efficient clinical trials, and develop more effective products that I think are going to be the end-all that keeps people living longer. And that's really the key theme with healthcare right now. One of the reasons healthcare is advancing so rapidly, it is a huge expense. It is 17% of GDP. It obviously has been a focus with the government. It's been a focus with the senior citizens. And the bottom line is, the people with the money want to live longer. When the people with the money want to live longer and they want to live more productive and more enjoyable lives, you're going to get results, and that's exactly what we're seeing coming out of the healthcare industry right now.
Now, regarding sub-industries, obviously you have drug developers, biotechs, life sciences, medical devices. Any of those key areas right now that are really outperforming?
There are ones that are outperforming within sectors, but a lot of that's being driven by such, maybe a dominant player within the group. I think the key now is across all of the subsectors, just continuing to look for companies that are really putting the money to work in tomorrow's pipeline, and that is companies that are continuing to invest in R&D and looking at those companies that have the strong partnerships, the strong collaborations, even if that's an earlier stage company that has something novel or innovative. I think those are the companies that are going to really excel as we move forward. I don't think any one particular sector, a sector could do great because a couple pharma companies buy it out and then you've got leaders, but I really try to look at the underlying core. And the reality is that both in medical devices, both in drug delivery and specialty pharma and biotechnology and a lot of the other subcategories, you have companies that are really trying to satisfy unmet medical needs. And you've got people there at those companies that have devoted their lives to it, and you've got other large companies that really need that pipeline. So you've got guys who've got something that other people need, and I think that's helping to fuel the belief and helping to drive sector performance because companies are actually putting up good results.
So is that trend in the initial stages, or are we seeing it starting to mature, or do you think this is going to ramp up maybe in the next 6 months, in the coming years?
I think we're going to continue to see it ramp up because the haves and the have-nots continue to get a wider gap between them, so the companies that need the products are going after them. And you're also seeing companies that have been very successful in the past really putting a lot of money to work in R&D and going at companies in earlier stage helping to backfill their pipeline. So I think with regard to healthcare, you're still in the early stages. I mean, you can make a case that some of the larger cap pharma companies that were dividend plays, etc., you could argue that, are you going to get as much growth out of a Novartis from here as you are out of a small cap biotech? Of course not. But you're not going to have the risk either. So I think in certain sectors of healthcare, whether it's the medical devices, whether it's the specialty pharmas, the generics which continue to grow, or the biotechs, you still have a tremendous upside. With large cap pharma as a whole, obviously there's less upside as a percentage gain because those are just more established giants.
Right, but that's something you hold long term, maybe as a safer play. Whereas if you have something you could maybe expose to some more risk, you look at smaller biotechs that have potential.
We believe in always owning a basket of stocks. There's no one company we have that's a favorite. You always take a couple underlying core, solid, large cap companies, if you will. Companies that are more innovative, building themselves out and going after biotech companies and not afraid to bring things in. Obviously, Johnson & Johnson has been very diversified. Novartis has been very diversified. But you sort of surround that with some names that have done well as far as putting products on the market, and then you've got your ones that are out for the higher risk, higher reward companies.
Right. You could really have a diversified portfolio just in healthcare. I mean, it's a sector that has no characteristics unlike anything else.
You've got 17% of the GDP being in healthcare, and you have to remember that something that works well in you may not work well in me, such as penicillin or aspirin. But the bottom line is you want to live longer and you want to be healthy, and without your health you have nothing. So I continue to believe that healthcare represents the right prescription for financial health.
Wonderful. Jeffery Kraws, Crystal Research Associates, thank you so much for joining us.
Pleasure.